A very good morning, guys. There is a thing that happens on monthly expiry day that almost nobody talks about. The smartest desk on the chain doesn't take a side, it clears the book. Yesterday on Nifty monthly expiry, pros went from plus 24,000 long futures to plus 960 on Tuesday's close. That is a 96% crash in one session. They sold 95,000 net long calls in the same window as well. Crashed both directional legs to flat by the bell. This is not bearish, this is a reset. The print released the conviction, and it means day one of the May series opens with no smart money tell to right. This is Tanmay's Hedge, episode 29, Wednesday and day one of the May cycle. Let me walk you through what changed at the print and what chain rebuilt overnight and why I am still buying dips today with a hedge underneath. Episode 28 called for 24,000 to hold and make it as the pinned expiry. Nifty closed at 23,996. Direction missed by 4 points. The pin was right in the concept and 4 points off on the execution. But check the rest of the prediction set. Range came in at 224.75, well under our 250 points cap that we spoke about yesterday. VIX closed at 18.05, under the 18.37 mark we spoke about yesterday. The 24,300 ceiling was never tested with a high of 24,181. 3 out of 5 hits, that is what we are counting right now. And when the AND gate is live, when Brent is extending day after day, when USD INR keeps stepping wider, the magnet does not bounce off the level, it pulls slightly through. That is the calibration shift we are working with going into May series day 1, and you have to listen to it. The 24,000 magnet pulled spot through by 4 points yesterday, closed below by a hair. Now the chain has rebuilt fresh at the same number for the next cycle. And here's the singular new fact of the day. Pro futures Monday closed plus 24,000, Pro futures Tuesday closed plus 900 contracts. The strongest bull structure of the season just liquidated in one session. This is a mechanical, not directional. Monthly expiry releases stacked positions. The smart money books PNL on the expiring chain and doesn't always roll the same conviction into the new cycle. They start from zero, which means reading pro positioning the day before monthly expiry was correct. Reading it on the day of the or the day after is reading the stale information. Day one of the new monthly has no pro tell. We have to wait a day or two for them to re-establish before we can read the next cycle bias. So the question this morning is not what is pro doing. The question is what does pro re-establish by Wednesday's close. That is the read of the week. While pro was clearing, the chain was rebuilding. Same center, 24,000 for the 5th May expiry, now sits with 7.38 million lines. Call OI at 3.75 million. Put OI at 3.63 million. That is the gravity for the next 7 sessions. A new put floor formed at 23,800 plus 0.9 million shares in one session. GEX is minus 501, that is a structural floor for the week. So 23,800 is the support we are talking about. A new call wall formed at 24,200 plus 1.53 million fresh contracts. GEX is plus 833 over there. That is the new ceiling we have to look out. So the straddle at 24,000 prints at 426. One standard deviation gives me a 533 points move Wednesday to next Monday. So the expected band on the spot remains at 23,450 on the bottom side to 24,550 on the upside. The May futures closed at 24,069. There was a 73 premium present to the spot. The next cycle rolled in bullish skew. June futures plus 205 rupees of premium. The futures curve is leaning long even on a day when pros went flat. This is the FIR pair trade signature. They covered 35,000 short futures yesterday on a red day, covered 84,000 short calls, added 15,000 long puts to almost reach 3,43,000 on their holding. The book got smarter and tighter. The pair ratio expanded from 4.37 to 4.66. They are de-risking around the print, not abandoning the structural bull stance. Remember this. So what happened while we swept? While we slept, Brent did not crack 112 like the AND gate would have wanted. It cooled. So 110.43 this morning, down 0.83, still well above the 96 trigger we have been talking about. But the leg is not extending today. That is a small win. USD INR held at 94.55, did not break 95. The Forex leg is flat overnight. Both AND gates legs are still firing, but neither is widening this morning. US closed cleaner than the mid-evening read is suggested. Dow plus 106 at 49 to 48. S&P minus 35, down 0.49%. Lighter red than the 0.64 slide at yesterday evening. Nasdaq finished minus 223, down 0.9%, recovered from almost a low of 1.15% mid-evening. No catastrophic overnight in the tech side. Asia is mixed, not red. Nikkei is down by 1%, Taiwan is down by 0.8%, but Hang Seng is up by 1.09, Shanghai is up by 0.12, Jakarta is up by 0.38, Kospi is closed for trading today. The broad red read from yesterday evening did not extend, and Gift Nifty this morning is up by 11 points. That is plus 115 versus our Tuesday's close of 23,995 and trading around 24,111. The relief gap rebuilt overnight did not fade. We open on Wednesday well above the 24,000 magnet. The setup that looked threatened yesterday now looks constructive at 8 a.m. today morning. And here is where I land, and I am going to tell you exactly what I am doing. My view is buy on dips with Hedge, unchanged from previous episodes. The conditions softened overnight, but the macro view did not. Buy on dips because the chain rebuilt at the same center. 7.3 million lines say 24,000 is the gravity. The May future closed plus 73 to the spot. FIR pair trade ratio expanded, not collapsed. The structural bull frame is intact entering day one. With Hedge, because, and listen carefully, wars is escalating. Iran is not budging. Crude is going harder on a 7-session run. The Hormuz tape will not cool easily. Brent stepped back to 110 today, but the trend is still up, not down. This is not the moment to chase upside without a put underneath. The dip opportunity will come this week. Stay patient. 24,500 is the upside, 23,500 is the bottom end. It always does in this regime, but not without protection. So my plan for Wednesday, wait for first 30 minutes, day one of the new monthly expiry. At flat, pros at flat is the noisiest read of the cycle. Let the range get established. Watch how 24,000 behaves on the gap up. If we open above 24,050 and hold, buy zone is 23,980 to 24,050 on pullback in the first half. Hedge with 23,800 put for 5th May expiry, currently trading around 129 rupees. That is your insurance. Cap is 24,200 for now. The new fresh wall will get created. Trim if we get over there. If we lose 24,000 in the first 30 minutes and do not reclaim by 10 a.m., I am not buying. I sit in the hedge and wait for 23,800 to test as support. That is a structural floor which is present. If Brent prints 112 plus intraday or USD INR breaks 95, the regime changes. IV could expand 17.80 to 19 plus. That is the expectation. Stand down on premium selling if that happens. Watch 76,500 Sensex for confirmation and accept that the week is going to be wall expansion, not wall crush. The honest call, I am not pretending I have a stronger one than them. The buy is conditional on level. The hedge is mandatory regardless. The size is half of the normal until day 2 or day 3 of the monthly series. You do not need a directional call today. You need to read which way pros and you should re-establish by tonight's close. That's the number is the call of the week. The chain rebuilt at 24,000 because that is where the structural maximum pain sits across. This market microstructure right now is pro reset because the print released their book. The smart money has not abandoned the trade. It has cleared the desk. Wednesday is the day to be patient. Buy quality dips with the hedge underneath. War, crude, currency, None of that resolves this week. None of it will get solved overnight. The traders who win consistently are not smarter, they are earlier. You have just gotten earlier, guys. This was Tanmay's Edge, episode 29, streaming free on rupeecase.com, India's first systematic investing terminal that I am building. Also streaming on Apple, Spotify. So if you like this podcast, please give it a thumbs up and give it a rating, and would love to read your reviews after these 30 episodes.